Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Algorhythm Holdings, and let me tell you, the numbers do a little dance before settling into something a bit more interesting than initially meets the eye. But before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Essentially, it looks like there was some concern about their financial standing, specifically about meeting the minimum equity requirements to stay listed on the Nasdaq Stock Exchange. The good news, it seems like they've managed to turn things around, but let's dig into the details to see how this happened. This report is a Form 8K, also known as a current report. Companies file these to announce major events that could be important to investors. This one was filed on May 2, 2025, so it's pretty recent. The date of the event that triggered this report was also May 2, 2025. This tells us that whatever is being reported happened on that day. The company in question is Algorhythm Holdings Inc., a Delaware corporation. Their file number with the Securities and Exchange Commission, or SEC, is 001414005. Think of this like their identification number with the government. Their IRS employer identification number is 95379547954779. This is like their social security number for tax purposes. The company's main office is located in Fort Lauderdale, Florida. If you wanted to send them mail, that's the address you would use. If you wanted to call them, their phone number is 954-5096-1000. Good to know if you have investor questions. Algorhythm Holdings stock trades on the Nasdaq under the ticker symbol RHYME. This is how you would find their stock if you wanted to trade it. Now, let's get to the heart of the matter. This section is where the company describes the event that triggered the report. According to their quarterly report for September 30, 2024, the company had about $2,700,000 in stockholders' equity. However, by the end of December 31, 2024, their annual report showed a stockholders deficit, which is basically the opposite of equity, of about $10,000. That's a big drop. The company says this deficit was mainly because of a $16,600,000 warrant liability. Warrants are like options that allow the holder to buy stock at a certain price. The company had to record this liability in connection with some warrants they issued when they had a public offering of securities in December 2024. Here's the good news. During the first 3 months of 2025, some things happened that fixed this problem. All the requirements, also known as contingencies, on the Series A warrants were met, and all the Series B warrants were exercised. Exercise means that the holders of these warrants used them to buy stock. This caused the warrant liability to be reclassified as stockholders' equity. Because of this, the company expects to report more than $2,500,000 in stockholders' equity. Because of this, the company expects to report more than $2,500,000 in stockholders' equity for the first 3 months of 2025. This will bring them back into compliance with Nasdaq's minimum equity requirements for continued listing. In other words, they will be able to stay listed on the stock exchange. Now that we've taken a look at the filing, let's step back and assess Algorhythm Holdings. This report tells us that the company had a scare regarding its ability to stay listed on the Nasdaq. The warrant liability caused a significant deficit in stockholders' equity, which could have led to delisting. However, the exercise of warrants in the first quarter of 2025 appears to have resolved this issue, bringing them back into compliance. This situation highlights a few important points. First, it shows how complex financial instruments like warrants can have a big impact on a company's balance sheet. Second, it underscores the importance of meeting Nasdaq's listing requirements, which are designed to protect investors. Third, it demonstrates how quickly a company's financial situation can change for better or worse. Looking at the company's direction, the resolution of the warrant liability issue is a positive sign. It suggests that management took quick action to address the problem and ensure continued listing on the Nasdaq. This is crucial for maintaining investor confidence and access to capital. However, it's important to remember that this is just one event in the company's history. Investors should continue to monitor Algorhythm Holdings' financial performance and strategy to get a complete picture of its long-term prospects. Also, remember that I am not a financial advisor. Alright, that's our breakdown of Algorhythm Holdings' latest filing. What's your take on these events and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.